have we not been having corrections? Here's the punchline. Have we not been having corrections in the market? Oh, look at that. Even Daddy O understands it. Awesome. Thank you, Gordon. Thank you, Rolingo. We've been having market corrections, right? And you know how I know we've had market corrections? Because we have been making money doing it. We have been shorting week after week. We buy a little, we hedge a little, we short, we hedge a little, we short. We've been doing quite well. We're not short sellers, but we have been buying puts and put debit spreads and call credit spreads and different combo trades. And over the last 4 months, 3.5 months or whatever, 2026 has been very, very good to us. And most of it has been trading to the downside. The short sellers have been making a lot of money too. But what happens on a gap up that holds, and then you get a catalyst that moves it higher, and then you start to get a gamma squeeze on top of it that I just talked about. This is what happened in the S&P 500, right? Let me show you something real quick. Hold on. I'm going to put that back on the screen. Hopefully I'll be able to. Correction, right? Short seller, short seller, short seller. Look at this. Remember this right here? Wednesday, Thursday, Friday, and we talked about this zone, and I said, I think it's going to stay in this zone. I was wrong. Because we got the mother of all squeezes. Yeah, you got to, it's not really a doji close, but yeah, okay. Yeah. I'm okay with that. Yes, we got a doji close. But you remember, we had this kind of thing going on here, right? And then, boom, 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 boom. So what happens is not only do you get the market maker doing this, you get the short sellers that have certain levels, maybe the daily 200, maybe it's the daily 50, maybe it's at 700, a big fat round number. Maybe it was at 690. Maybe it was at 699, right below. There are levels where the short sellers have levels called stop losses. Because remember, if they shorted here at 645 short, can you imagine if they just let it go? Let it go. 710? Holy frickin' cannoli, right? You're talking about $65 a share. 10,000 shares would be how much? That's a loss of $6 million. If you just had a $10,000 short position on the S&Ps right here, and you didn't have a stop loss, you'd be down $6.5 million by the end of yesterday, right? And no end in sight. What if this keeps going? The losses are unlimited, so you can't do that if you're an experienced short seller. So you have stops along the way. And these stops are what? Remember, how does a short seller get out of their trade at these levels? Buy to cover. They buy back the stock. Well, all the stock market sees is a buy order. So not only do you have, just let's think of the list of, you have out of the money call buyers, right? You have hedge fund stock buyers and institution buying as well. You've got the retail chasers. You got the buy the dippers that might be coming to play. Boom, 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 boom. You have the almighty market maker that's buying, right? And now, on top of all of that, you have short covering. Because now this is called, oh, by the way, when price starts to move like this against the shorts, it's called a short squeeze. The shorts are now squeezed where they have to buy it back. And what happens is they might have a buy order. Watch this. If they have a buy order in here at the 200, do you see the 200 right here? See the 200 right here? Do you see a gap? Boom. Boom. You see how it gapped up here over the 200? Everybody see? Can you see it on your screens, guys? That's the 200 period moving average. Price ended here on a Tuesday, and we gapped here over the 200 and over the 50, oh, by the way, on that Wednesday. Everybody see? I'll clear it again. So let me ask you a common sense question. This, oh, by the way, it's a lot of oh, by the ways. See the 200? You see the price? 666. If you had a stop loss order against your short, right here, if price gets to this level, get me out. I don't want to have to go through this. That's my stop if I'm a short seller. What happens when they wake up in the morning and price gapped above it? Did their short get covered? Yes or no? No. They are in a squeeze. They are getting squeezed and it freaking hurts. So now, instead of getting out at 666, they got to put their order at what? 674. Problem is, market's on fire. It's on fire. Look at this. Whoa. Now they got to get it. So they try to get out at 678. Can't. 679. Can't. Screw it. Put it at 682. Get me out. Anyone ever see the movie Wall Street? Just get me out at 682. Yeah, the order doesn't fill. Has anybody ever traded more than 20 contracts and you get a partial fill? And you're like, what the hell's going on? This isn't funny. Try buying back 10,000 or 100,000 shares of stock under market volatility conditions when the market is screaming. Look at this. The market is screaming higher. Go try to sell 100,000 shares of the SPY at 670 something at 9:45 in the morning. It ain't happening. So they have to put their order way up in order to get filled. Yeah, bye-bye. Oof. It's just an ugly scenario. Anyway, that is called a short squeeze. So, in conclusion, after a downturn like this, you get a little bit of movement, but you've been failing every time. Every time there's been a move up, you get a failure. Trump says, boop, you get a failure. Trump goes, boop, you get a failure. Trump goes, boop, failure. Trump, boom. Trump, boom. Taco, boom. Taco, boom. Right? That's been the market until some rhetoric, until some hedge funds said, let's pump a little. Okay, cool. Oh, guess what? We have a deal. We have a ceasefire. We have whatever. Oil's coming down. We get a gap up. We get some data. Now we've got a catalyst. Now the market maker goes into a frenzy buy. There's still not a lot of volume in the market right here. right? Not a lot of buying, but the market maker's going bananas. Why? Because the 690 calls are going, it's an incredible amount of volume. The 695s, not the 700s yet. Let's wait for it, wait for it, wait for it. Not the 705s, let's wait for it. Dare I say 710s? Not yet. But the market maker is pumping. The retailers pump. And now it starts to trigger the short squeezers. And you now end up with the mother of all squeezes. You get gamma squeeze and short squeeze from the shorts, along with the buy the dip crowd, along with the retail chasers, the hedge funds, the institutional funds. I'm going to show you a couple of other things. This is the put call ratio. See all the puts bought here? See how the market's coming down, and the market was coming down a little bit right here and flattening out. This up here. It became, but it's mainly open here, close here, open here, close here, open here, close here. See what open and then close? That's more put buying than call buying. Now look. See where it went like this? See the gap up at the gap and go right here? Look what happened. It's incredible, right? Look at this. Boom, 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 boom. See how this is coming down? This is call buying. The ratio of puts to calls is narrowing. It's getting lower and lower. Why? Because there's an abundance of call. This is a ratio, not amounts of calls or volume or anything. This is a volume ratio of puts up here, calls down here. When this starts to drop like this, you're getting a squeeze, baby. Not much you can do about it. So you could see it happening on the put call ratio. You could see it squeezing in Bitcoin. You could see the squeeze in NVIDIA. Look at NVIDIA just piling higher. So now let me show you the proof of what I say. See the price? We closed just above 710. Insane, right? Oh, I can't show that. I had it before. Oh, damn. When I rebooted, the numbers from the 17th went away. Maybe some of them are here. Yeah, they are, but not quite the same. Wow. Well, what I can tell you what was here on Friday, I'm going to make it up. If you looked at 710, there were about 800,000 calls at the 710 mark. And above at 11 and 12 were about 600,000 or 700,000. So like 1.5 million above 710. And over here was about 800,000 puts. And even more here and here. So by the market maker landing price right here, between the call, eventually the calls they had to sell, right? So they started selling at the end of the day to take their profit. So the market maker wouldn't care if he parked price above 710 because the 710s that were in the money were not going to get exercised. And they weren't going to, he wouldn't even have to pay them either, right? So anybody that had all these out of the money calls, and there was tons of them, they all got roasted because price, their calls were above 710. They were 711 and above. And then because it finished at 710 and change, all the put holders here, there was 890,000 here. And then 700,000, 800,000, like just tremendous amount here as well. They got roasted. They expired worthless, expired worthless, expired worthless. So the market maker got squozed, but in the end, closed price right where it would exert the most pain, here and here. And so when you looked at the volume, the initial open interest on Friday, there wasn't that much here at the 706, 7, 8, 9, 10, 11, 12. There wasn't that much here. But the volume here was monstrous. They were pumping this like there was no tomorrow. So you had the pump, the market maker squeeze, and as prices moving up, you have the, oh no, it's time for me to try to get out of my short. You had the short covering and the gamma squeeze happening at the same time. All the while, you see yields going down, you see the dollar initially going down, you see Bitcoin going up, the VIX is coming, this is the VIX right here, the VIX is coming down, all good signs. Yay, everything is great. Not true, just reacting to market price action. That's what happened.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comment section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.